Welcome to Ty and Rye, the Finance Guys Market Mini Report, a short podcast that updates you on the past week's important topics and trends. Remember, this is not an offer to sell, and past performance does not guarantee future returns. Here are Ty Hansen and Ryan Robertson.
Hello and welcome to another episode of Ty and Rye, the Finance Guys. This week I'm actually going to do a market mini for the week ending March 18th. So it's been a couple of weeks since we did a market mini, so I'll jump in and give some thoughts about what we're seeing in the marketplace right now. So again, as always, we want to just say thanks for the listen. We appreciate the subscriptions and for everybody that chimes in and gives us some feedback. We really appreciate it. As always, you're welcome to email us at support@myprosperteam.com. That's actually our advisory firm. But yeah, and check us out as always at tyandrye.com. So anyways, let's talk markets. It's definitely been a crazy couple of weeks. The one nice thing I will say is the recovery this week. So as most people, everybody's been, concerned. There's been a lot of, stress in the marketplace the last little bit because of all the volatility, because of the sell-off. And, I've been talking about this number to a lot of people the last month or two, but we're seeing this, and I've talked about it, right? There's resistances and ceilings. There's like kind of this channel or path, kind of this corridor that you'll see stock movement bounce between. Right. And there's different things that happen depending on if you break through the ceiling or drop through that floor. Obviously, the more problematic of the two is if we break through that floor, that resistance floor. Statistically speaking, it's interesting what happens if that happens, if that's the case. Anyways, that resistance floor that we've had built in the last month or two, few months, is right around about 40 S&P 500. Right. We look at it for the market. And you can build these for any specific stock, any specific industry, but I'm talking specifically about the S&P 500. And that floor has been right around 4,150 to 4,200, right in that range. And sure enough, end of last week, we kind of saw that now for the fourth time this year, we've hit that resistance floor. And every time we have, boom, it's popped. In fact, I told one of my buddies, one of my good buddies that I do, anyways, we climb a bunch together and things like that. So Monday night we'd hit that floor again, and I talked to him and I said, hey, look, here's the thing. I'm not, nobody knows what's going to happen in the market, tomorrow, next week. Nobody knows what's going to happen, but obviously we gather information, we make the best educated decisions and guesses that we can. But I told my buddy, I said, listen, we're hitting that resistance again today, sure enough. And I said, I will bet you a steak dinner that we start to see a recovery. And like I said, I told him that Monday night. And sure enough, basically market was right around, it hit the low that day of about 4160 and on Monday. And now here we are at the end of the week. Market is up 4.3%. So again, crazy things could have happened that could have triggered that to break through that resistance floor. I wouldn't have known that. But this is what I keep coming back and harping on with everybody and talking to people about is, listen, everybody keeps saying, oh, the market's going to fall, it's going to fall, it's going to fall. It's like, don't get me wrong, there's that risk. We're definitely in a more volatile time. The volatility index is super high. But we're still trading in a window that is very normal and very healthy. Don't get me wrong, it sucks. Your portfolios have lost money. It's frustrating. But we're still in a normal trading window. And sure enough, we've seen some decent recovery this week. So, obviously then the $1 million question is, well, is it, can we break through this little, circular cycle that we're stuck in right now, right? This little bear cycle we're in right now, and are we going to see some, get back to some better growth and some better returns on the year? Anyways, there's some other thoughts we can have about that, but let's come back to that in just a second. So again, I just want to recap that this week, the market is positive, right? It's up, for a little over 4%. S&P 500. Dow is up about 3.7. The bigger returns have been in technology. It's up about 5.8% this week. Bonds are also, up a little bit, about 0.2%. Now, this is what's interesting is, so many people are like, because the Fed finally this week, Fed came out, yep, we're raising the rate. Like it's official, right? And they bumped it 0.25%. So what's interesting about this is this has been priced into the market for quite a while now, because we've known for we've known for a long time that the Fed had to raise interest rates. Then they got a little bit more specific and said, yeah, hey, we're looking at 3 to 5 rate hikes in 2022, and then they specifically said it was going to happen in March, and that happened this week, right? Fed raised the rates 0.25%. Markets rallied. So a lot of people are like, wait a second, Ty, if the Fed's raising rates, shouldn't we see the markets tumble? And that's the thought is that the market has already baked that in. And in my opinion, I think the market had actually baked in a little bit more to this. Okay, that the market was expecting maybe something even a little bit more aggressive than what we saw this week. And so, anyways, the markets are up. We're seeing some good returns. Cryptos are up this week. The economic data, funny enough, wasn't as strong this week. We saw some of the retail sale numbers come in a little bit under expectations, things like that. Now, I'll keep harping on the same thing I've been harping on the last 2 months. Inflation sucks. It's high. Gas prices are high. We get it, right? And it's not because of Biden. Part of it's the war. Part of it's the sanctions. To be frank, part of it's price gouging, right? I think that's, the oil companies, that's part of what's happening more so. But anyways, back to inflation. So inflation sucks. Things are expensive, right? Gas prices are high. But we're still seeing enough economic output, right? The previous forecast was supposed to be closer to 4% on the year. We're more in that range of high 2s, low 3s, which again, what we've experienced last year and pre-COVID for, the few years prior to that, we had really strong economic output. So what I mean by this is like it's definitely dropped a little bit, but we're still seeing a strong enough economic output for the year that even with inflation and the rising of interest rates, where the Fed's kind of correcting and looking to kind of manage inflation, things like that, we're handling it well. Now, could it be better? Absolutely. Are we going to see a recession? I'm still in the camp that we are not. And even though we're like I said, like we're seeing this inflation so high, a lot of the analysts I read, a lot of the data I look at, we're still projected to have that economic growth. And as long as you have economic growth, right, and we've got people buying things, selling things, working, jobs being filled, you don't slip into a recession. We're in an environment that lends itself. There's a lot of pieces here that could indicate, that we're not recession proof. We're leaning towards a recession, but again, I'm still seeing enough fundamental data to say that we're not going to have that. I'm still in that camp. And I would say that I'm in that minority, but I would say about 40-45% of the analysts right now are still in my, with my same thoughts that we feel like there's enough being produced, there's enough strength, there's enough steam in the marketplace. The kind of the common man and woman is still spending money. And as long as we continue to see that, we're going to kind of ride this inflation wave, which it's, look, the 3-year projected average is right around 3.2, 3.3%, which sucks. That for a trailing 3-year average, that's still high. But when you take a step back and look at big picture, we're still extremely low with inflation when you look at the kind of the more, longer projections, right? Right now is high. We get it. It sucks. But I'm more interested in understanding, well, what's that 3 to 10 year projected outlook? And when you look at that compared to where we've been the last 30, 40 years, we're still extremely low with inflation. So anyways, long and short is we're okay. We're hanging in there. Markets are doing all right. We saw a nice recovery this week. And, we're still seeing some good forecasts. So, again, as always, thanks for the listen. I appreciate you listening to me ramble for a few minutes, and it's great to share some thoughts. And then next week we'll have Ryan back. So, thanks again. Have a great weekend. And, we'll bring another episode next week.
Thanks for listening to Ty and Rai, the Finance Guys. This is our weekly market mini report. New episodes of this will be put out every Monday, so make sure you don't miss those. Also, the longer podcasts, more in-depth discussions, those will drop every Saturday. So subscribe on your favorite podcast platform or follow us on TikTok, Instagram, Facebook, Twitter, YouTube at Ty and Rai Podcast. That way you don't miss any new episodes. Thanks for listening, everybody. Hope you have a great week.